Have you ever wondered about the best way to invest in real estate? A question that's crossed every potential investor's mind. There are two main avenues to explore: buying property directly or investing in a real estate fund. The former is akin to a hands-on approach. You're in the driver's seat, steering your investment journey. The latter, however, is a more passive investment strategy, letting the professionals navigate. Both options have their pros and cons. Let's delve deeper. So, you are considering buying property directly? That's one way to get your hands dirty. Diving into the world of direct property investment can be an exciting journey. It certainly has its perks. One of the big ones is the potential for higher returns. You see, when you're the direct owner, all profits from rent or the sale of the property go straight into your pocket. There are no middlemen taking a cut. Moreover, you have full control. You decide where to invest, how much to charge for rent, and when to sell. You're the captain of your own ship, so to speak. And let's not forget about direct involvement. You're not just watching from the sidelines. You're in the game, making the plays. But like any other journey, there are a few bumps along the road. One of the big ones is the high upfront costs. Buying property isn't cheap. You'll need a hefty sum for the down payment, not to mention closing costs and ongoing maintenance expenses. And speaking of maintenance, that brings us to another drawback: time commitment. Owning property takes time and effort. You'll be dealing with tenants, handling repairs, and staying on top of property laws and regulations. Lastly, there's the issue of dealing with tenants. It's not always easy, and it can be stressful. Late rent payments, property damage, disputes, these can all become part of your everyday life as a property owner. Direct property investment might be more hands-on than you'd like, but what about a more passive approach? If being a landlord sounds like too much work, maybe a real estate fund is more your style. Now, let's delve into the potential benefits and drawbacks of investing in a real estate fund. Starting with the pros, real estate funds offer diversification. Rather than putting all your eggs in one property basket, funds spread your investment across multiple properties, reducing risk. Next, these funds are professionally managed. The fund managers are experts in their field, and their full-time job is to ensure that the fund performs well. This means you won't have to worry about midnight calls about a broken water heater. Lastly, investing in a real estate fund requires less time commitment. You can sit back, relax, and let the professionals do the work. However, it's not all sunshine and rainbows. There are also cons to consider. Firstly, management fees can be a downer. These fees eat into your returns and can make a significant difference over time. Additionally, investing in a fund means you'll have less control. You won't be able to make decisions about which properties to buy or sell or how to manage them. Lastly, potentially lower returns can be a concern. While real estate funds can provide steady income, they may not offer the same potential for high returns as owning property directly. In conclusion, real estate funds can offer a simpler way to invest in property, but they're not without their drawbacks. So, which is the best option for you, active or passive? As we've journeyed through the realms of real estate investment, we've seen that both paths have their merits. Let's jog our memory a bit. Buying property directly can seem like a thrilling adventure. You're at the helm, navigating the real estate seas, tackling everything from property selection, maintenance, to tenant management. It's hands-on, it's personal, and it's potentially very rewarding. On the flip side, investing in a real estate fund offers a more hands-off experience. You get to ride the waves of the property market without having to worry about leaky faucets and late-night tenant calls. It's a way to dip your toes in the property pool without diving in head first. So, which path should you tread? Well, the answer lies within you. It depends on your temperament, your financial aspirations, and your lifestyle. If you're a gritty go-getter who loves a challenge, direct property investment might be your calling. But if you'd rather sip a cocktail on the beach while your money works for you, a real estate fund may be more your speed. Remember, the best investment strategy is the one that aligns with who you are. And who knows, once you've had your fill of midnight plumbing emergencies and tenant disputes, you might find that real estate funds offer a more relaxing way to invest in property. After all, isn't life too short to be spent chasing rent checks?